Hello and welcome to another trading video recap for adaytradersjourney.com, and this is for September 10th 2015, and this is on the Russell 2000, the E-mini Russell 2000 contract. I do trade the Russell as well as the E-mini S&P every day. I watch both markets and see which ones have better setups for the day. And today I wanted to show the Russell because I took only one trade today live, and it was on the Russell. But I have circles here, blue circles showing trades that would have been profitable, and red circles are trades that would have been stop losses. And the first setup you see here, we have price breaking above the 5-minute opening range, or in this case, I'm sorry, 6-minute opening range, because we're using 3-minute bars, and which shows strength, and we're looking for longs. So once we had a swing high here, I started doing my count of entries, and this one was the first entry here, which is the break of the previous bar, break of the high of the previous bar, because we're looking for longs now only because we're above the 5-minute, 6-minute opening range. So this is our first entry, second entry here, break above the previous bar, and then we dip down again, and we have a little third entry here. You can see a break above the previous high, and here is the fourth entry. And this one is where you would take a long entry on, and it's circled here because we have this green bar that broke above the previous high with this fourth entry, but I was still waiting for a break of a bullish bar. For long trades, I only take long trades on breaks of bullish bars or green bars. So even though this broke the previous bar, which is the fourth entry here above this red bar here, I still waited for a break above the high of this bar, or you would have if you've taken this trade. These are again setups that were available today, but not all of them that I take. And you can see this would have worked out if you placed your stop below the swing low of that entry, and you would have ridden that up to the full profit. Here's another example of a second entry long. Here we have a swing high, and you start your count. Again, we're only looking for longs because we're above the 6-minute opening range, and the EMAs are bullish, 21 above the 50 EMA. So here you can do your count again, start from the top, and you have your first entry here, which is a break above the previous high of the bar. And you have the next time you have a break of a previous high of the previous bar is here, and this was a bullish bar break. So that's a valid entry point for my trading strategy. And I always take I trade 2 ticks, a 2-tick break on the E-mini Russell. On the E-mini S&P, I only wait for 1 tick break. So the high of this bar, for example, is 1151.5. So my entry would be 1151.7. I need it to break by 2 ticks to be valid for me. And so then this would be another example of a very profitable trade. And then here's the actual trade that I did take. And I describe what it is. It's a fourth entry. I entered in kind of late, and again, this is around 10 a.m. Pacific time, so this is during a slow trading time, so it's very dangerous here, very choppy. But I saw an opportunity here, which was a fourth entry around this choppiness, and overall we stayed bullish, so I was very confident that prices were going to go a little bit higher. So I entered in here on this green arrow and took a long based on a fourth entry. And I wrote down here that the tick was flat to weak when I entered, and it was risky trade and all that. Also, my reasoning for getting out early on this trade. But if you can see here, it's kind of hard to see where the entry is, where this green arrow is. But I can start from the swing high and do my count. And you have here your first entry here, first, and then you have your second entry here, your break of the previous bar's high, and then you have your third entry here. And again, these are not trades I actually took. I didn't enter in here, but I just call them entries, because but the actual trigger happened. Here's your fourth entry above the high of this green bar, because it actually broke a bullish bar to get me in. So you would have been long around 1154.2, and I didn't enter in until around here. So I got into this trade. It worked out. And I got out a little early as it went up because it was in the middle of the day. And a profitable trade, and that was the only trade I took for the day in the E-mini Russell. And here's some other examples of trades that would have happened or had happened, but I did not take. And this is a third entry long that gets stopped out. So this is a losing trade example. And you have your swing high here. Your first entry is here, above the break of this previous bar. Here's your second entry, above a break above the previous high of the bar. And then here's your third entry. Here's a break of this bar, previous bar, it's a bullish bar. So the break of above a bullish bar, you take it, as long as it's a second entry or later. And this was a third entry, and let's see here, you see how it just went up a little bit and then came back down. Your stop would have been placed below the swing low, so it would have been placed a little bit below here, and you would have been stopped out. So that's a losing trade. But whenever I have a losing trade, I will watch it for a possible reversal or a re-entry into the same trade for the same technical. So I drew a support line based on where the swing low was right here, and what I did was, here it actually should be right around there. Should be your support line. So I was watching this trade here as it stopped me out. You can see prices went back up, touched the EMAs, and didn't really break above the EMAs. It held as support, and this support line here pretty much held as support as well. So as it was consolidating here, I would want to take a short as a reversal trade to the downside. And the reason being is because, again, this third entry long that got stopped out, and then price stayed below that. It didn't really go back up in this area where it would show me some bullish strength. So this is a sign of weakness. And if you did a little small count here, you can, from the swing low, you could see here you would have a first entry short, break below the low of the previous bar here, and here again, the second entry, and then here again here. And this is a bearish bar, red bar. You can barely see it, but you see this red bar. A break below the red bar is a good signal for me to get in short when I'm looking for shorts. And in this case, when I'm looking for a possible reversal, that's a short trade. And it's a more advanced trade setup, but it was very easy to see that once you have a failure or a stop loss on a bullish trade, which you think is bullish, and you see that just trapped you here, you went up a little bit and then went right back down, stopped you out, that could lead to a possible reversal to further weakness if price can't get back up to above where you got stopped out. So that's something I watch in my price action trading. So that's an example of a reversal trade, and I denote that here in terms of the explanation. And so I use that to watch and learn and see if that happens again in the future. So this is an example of E-mini Russell trading recap for September 10th. You can watch many other videos I have on my website, adaytradersjourney.com, to describe my trading strategy and how I get into trades. Please leave your comments and questions below, and look forward to adding some more videos and getting more feedback. Thank you very much.